Right now, the stock market is celebrating a massive AI relief rally, but in exactly 3 days, the Pentagon is threatening to seize that exact same technology.
It is the ultimate cognitive dissonance. I mean,
Hmm.
you have investors cheering for this future of peaceful human-AI collaboration, and meanwhile, Washington is preparing for a constitutional showdown at home and a kinetic conflict abroad.
And that is exactly what we are unpacking in this deep dive today. We're going to show you why the soft landing everyone is celebrating is actually a cover for a massive systemic risk that most people are just completely missing.
Because if you just read the headlines today, you're flying blind. You really have to look at the underlying currents to see the collision course we are on.
Right, and we have a huge stack of source material to get through to prove this. We're pulling from Bloomberg's market coverage from this afternoon, some incredible strategy notes from Goldman and Mizuho, and the raw political briefings on tonight's State of the Union.
And our mission here is simple. We need to figure out why capital is aggressively fleeing to dirt and glass, what they're called the halo trade, while the geopolitical board looks like a total powder keg.
So let's just jump right into the market because the price action today was, well, it was aggressive. We saw this massive rebound in software stocks. Salesforce was up, what, 6%?
Yeah, right around 6. And the narrative driving this whole relief rally was that Anthropic live stream from earlier today.
Which was basically a giant PR exercise to calm everyone down, right? What exactly did they say?
They played it incredibly smart. They came out and specifically framed AI as a collaborator. The whole message was, we aren't here to eat your lunch. We aren't here to supplant your enterprise software stack. We just want to sit right alongside it.
The classic "we come in peace" routine.
Essentially, yeah. And the market was just so desperate to hear that. They wanted reassurance that these big software platforms aren't going to be completely obsolete by next Tuesday. But, and this is where the tension really starts, if you look past that shiny Anthropic headline, the narrative has some massive cracks.
Which brings us to Workday.
Exactly. You have to look at Workday.
Because Workday was the big outlier today. I mean, it was brutal. Even with this whole relief rally lifting up the sector, Workday stock just tanked. It was down 7 or 8% in after-hours trading.
And on the surface, that makes no sense. They beat revenue estimates. Normally, that's a win. You pop the champagne. But their forward guidance was incredibly weak.
So why the drop? Is it just a bad quarter, or are we looking at something structural here?
The market is absolutely betting it's structural. Think about how Workday and really Salesforce and a dozen others actually make their money. Their whole business model is seat-based.
Right. You pay a license fee for every human employee who needs a login.
Right. Now, if AI truly acts as this super collaborator that creates massive efficiency, what happens to your corporate headcount?
It shrinks.
Drastically.
Yeah.
Companies might realize they need, say, 30% fewer human beings in HR and finance to process the exact same amount of work.
And fewer humans means fewer seats.
And fewer seats means the entire revenue model of the software industry starts to collapse. So even if Anthropic is out there saying, hey, we are just collaborating, the math of that collaboration implies shrinking revenue for traditional software.
So investors are terrified of displacement. They're effectively saying, we believe you, Anthropic, but we are selling off the companies you're theoretically collaborating with anyway.
Exactly. They see the writing on the wall. Which is what brings us to this Goldman Sachs strategy note that completely took over the trading desks today. The halo trade.
Yeah, the halo trade. Break that down for us, because this is a fascinating pivot. HALO. Heavy assets, low obsolescence.
It is capital fleeing the cloud and running back to the physical world. Low obsolescence means things that cannot be coded away by an AI agent over the weekend.
So no vaporware.
Zero vaporware. Investors are pouring billions into physical constraints. We are talking about ASML, the Dutch company that literally builds the lithography machines that make the chips. They're up 40% year to date.
Then Corning, right? The glass substrate manufacturer.
Up 70%. And then you have Texas Pacific Land, up 80%.
Which is wild because Texas Pacific Land is basically just an oil and gas royalty company. It's literally just dirt in the Permian Basin.
It's dirt, water, and energy. Because here is the brutal reality. You cannot prompt engineer a piece of land. You can't ask a large language model to hallucinate a glass substrate.
Right.
The halo trade is the market's safety net. Capital is saying, look, I have no idea which software company survives the AI wars, but I know whoever wins is going to need silicon, they're going to need glass, and they're going to need a massive amount of electricity.
It's the ultimate pick and shovel play. And speaking of the hardware layer, we had a massive bombshell today. Meta and AMD.
Oh, this is the enemy of my enemy is my friend moment of the decade.
Meta announced they are investing billions to buy chips specifically from AMD, and AMD jumped, what, 9% on the news?
Yep. And the timing is everything. Tomorrow is NVIDIA's earnings report, and the expectations are just completely divorced from reality. At this point, 68% revenue growth expected.
So this Meta deal with AMD, it's basically the tech giants trying to break NVIDIA's stranglehold.
Absolutely, because NVIDIA's monopoly isn't just the physical silicon, it's CUDA. It's their proprietary software layer that everyone is locked into. Zuckerberg and Meta are essentially forcing diversification. They are drawing a line in the sand saying we cannot be entirely beholden to a single supplier for the most critical geopolitical resource of the 21st century.
Geopolitical resource. That's the perfect pivot. Because while Wall Street is playing these corporate chess games and buying the collaboration story, the Department of Defense is operating in a completely different reality today.
This was the briefing that actually made my jaw drop. The Pentagon isn't asking tech companies nicely anymore. They are threatening to literally terminate Anthropic's military contracts by this Friday.
But wait, it's not just a standard contract dispute. They aren't just canceling a vendor.
No, they are threatening to invoke the Defense Production Act, the DPA.
And for you listening, if you remember the DPA from the pandemic, that's the Korean War era law they used to force GM to make ventilators, right?
Precisely. It gives the executive branch the power to prioritize government orders over private contracts and, in extreme cases, seize control of materials and facilities for national security.
But using that on an algorithm, on
No.
software?
It is totally unprecedented. They are treating these AI models like essential biological protective gear during a world war. If Anthropic doesn't comply with the Pentagon's security and deployment terms by Friday, the government is essentially saying they will seize the compute capacity.
So the private sector is pricing in profit and collaboration, while the state is literally pricing in conscription and national security seizure.
That is the disconnect we're talking about. It's a binary risk. If the DPA drops on Friday, that entire software relief rally we saw today, it completely evaporates. Every tech investor suddenly wakes up to the fact that their asset is actually a national security asset, and the U.S. government holds the golden chair.
That is terrifying for the markets. And it perfectly sets the stage for what is happening tonight, the State of the Union address. Because we're talking about executive power, and President Trump, who, as a reminder, is the incumbent in our 2026 timeline here, is heading to the Capitol tonight with a very specific narrative.
The White House has been telegraphing all day that he is going to stand up there and claim total victory on affordability.
But the data does not support that victory lap at all.
Not even a little bit. We have fresh polling showing 57% of U.S. adults still view his handling of the economy negatively.
Right, because prices haven't actually gone down, the inflation rate just slowed. Things are still incredibly expensive for the average person.
And the market knows he has a political problem on his hands. If you claim you won, but the voters are still hurting, you need a scapegoat. You need a villain.
Which explains the healthcare sector today. United Health and Humana were bleeding out.
Exactly. The betting money on Wall Street is that he puts the health insurers directly in the crosshairs tonight to explain away why families are still broke.
But there's a much bigger constitutional bomb he might drop tonight regarding affordability, the tax cuts.
This is where the risk models start flashing red. The reports from our sources indicate he is going to propose massive personal and corporate tax cuts.
Which sounds standard for State of the Union.
Right, except the twist is that he is claiming he can implement them entirely via executive decree, without Congress.
Wait, without Congress. Article 1 of the Constitution is pretty unambiguous about the power of the purse. Congress controls revenue.
Exactly. If he uses that podium tonight to announce tax cuts by decree, maybe twisting some emergency economic power or reinterpreting a statute, we are no longer talking about fiscal policy. We are looking at an immediate constitutional crisis.
The injunctions would be filed before he even finishes the speech.
Before he even leaves the chamber. And he's threatening this while the federal government is technically in a partial shutdown.
Right. We have to contextualize that because while he's giving this speech, the Department of Homeland Security is partially unfunded. And look, just to be incredibly clear for you listening, we do not take sides on this deep dive. Right wing, left wing, we aren't endorsing any of the politics here. We are strictly unpacking the raw source material so you can understand the systemic risk.
And the raw reality of this DHS shutdown is that it is a massive, intractable, ideological collision. It's not a fight over a few $1 billion. It's a fight over authority.
We saw the quote today from Democratic Representative Pete Aguilar. He literally called ICE a rogue vigilante group. That is incredibly aggressive language.
The stalemate is very specific. Republicans are demanding that ICE agents be allowed to operate without any new restrictions to secure the border.
And the Democrats?
The Democrats are demanding that agents must physically identify themselves, as in no face masks during raids, and they must secure judicial warrants for every enforcement action.
So Democrats want judicial oversight and transparency, and the administration is saying that completely handicaps their ability to enforce the law.
Right, and the administration is pointing to their data claiming illegal crossings are down 95%, basically saying our hardline methods are working, don't break them.
It is a profound clash of civil liberties versus state security playing out in real time while the funding clock runs out. But honestly, usually a shutdown and a constitutional tax fight is enough to fill an entire deep dive. Today, though, the international stakes actually eclipse the domestic ones.
Yeah, the geopolitical board is flashing warning signs everywhere. Let's talk about the Gang of Eight meeting.
Right. They met today with Secretary of State Marco Rubio. And just for context, when the Gang of Eight meets, which is the top intel leadership from both parties in the House and Senate, it is almost always about imminent, highly classified military or intelligence actions.
And the leaks coming out of that meeting are chilling. We know the U.S. has been aggressively amassing naval and air forces in the Middle East over the last month. But the new detail today is that there is a strict 15-day deadline for Iran to comply with nuclear demands.
15 days. In diplomatic terms, that is basically tomorrow.
It means the negotiation window is closed. We are firmly in the ultimatum phase. And there is heavy speculation in the defense sector that the president might use the SOTU tonight to formally announce military strikes, or at least authorize them.
And how does the market digest that? Because they were throwing a party for software stocks today.
The market utterly hates kinetic war. It hates the uncertainty of supply chain disruption. If the U.S. pivots from this peace-through-strength rhetoric into an active shooting war with Iran, the relief rally dies instantly.
Because you can't have a halo trade heavily reliant on Taiwanese chips and global energy shipping if the Strait of Hormuz is suddenly a war zone.
Exactly. Everything is connected.
Yeah.
And we can't ignore the other front. Today marks exactly 4 years of the war in Ukraine.
4 full years. And the intelligence community chatter on this has taken a really weird, almost psychological turn. Our sources were highlighting this massive debate in Washington over whether Putin actually knows he is losing.
Which sounds absurd on the surface, right?
Yeah.
Doesn't a dictator have access to the casualty report?
You would think so. But what's the underlying strategy here?
The Western strategy has been attrition. Drain the Russian economy, bleed them out, make the occupation mathematically unsustainable. But on the ground, the map hasn't shifted the way NATO wanted. So the intelligence debate is this. Is Putin operating in an echo chamber of bad information from terrified generals? Or is the West projecting a weakness onto him that simply doesn't exist?
It's the ultimate blind spot. We are making policy based on what we assume his mental state is.
And that is incredibly dangerous.
It feels like disconnect really is the defining word for today. We have a disconnect in the tech markets, a disconnect in the polling versus the SOTU claims, and a disconnect in military intelligence.
And you can see that exact same fragmentation filtering all the way down to the regular American consumer. It's not just happening in the Pentagon, it's happening at the mall.
Yes, let's talk about the consumer economy, the tale of two retailers. This was buried in the stack, but it says so much. On one hand, you have Saks Global, the parent company of Saks Fifth Avenue and Neiman Marcus, formally filing for bankruptcy today.
Luxury is collapsing. Saks is the absolute canary in the coal mine for the high-end, aspirational consumer.
They have massive inventory issues, right? Brands are refusing to ship to them.
Because the brands don't believe they'll actually get paid. Now, the Saks CEO came out swinging, claiming they have $1.7 billion in liquidity to restructure and fix the ship.
But bankruptcy is bankruptcy.
Exactly. It sends a clear signal that upper middle-class shopper, the person who used to stretch their credit card to buy a $2,000 bag to feel wealthy, that consumer has completely left the building.
But then you look at the other side of the spectrum, Planet Fitness and Kava.
A completely inverted reality. The CEO of Planet Fitness was on Bloomberg today calling this the golden age of fitness. They just crossed 20 million members.
20 million, because the membership is what, $15 a month?
Exactly. It's $15. And look at Kava, the Mediterranean fast casual chain. They are crushing their earnings estimates with 3 to 5% growth guidance.
And the specific reason they are winning is fascinating. They took significantly less price action than their competitors, like Chipotle. They refused to hike prices as aggressively.
So the deep takeaway for you, the listener, is that the American consumer hasn't actually stopped spending money. They are just aggressively trading down.
It's a massive behavioral shift from status to survival, or maybe status to wellness. You swap out the luxury handbag you can't afford for a cheap gym membership and a hummus bowl that makes you feel good.
It's value over vanity. The consumer's ruthlessly rationalizing their budget right now.
That paints such a stark picture of the economy. And speaking of the plumbing of the economy, we have to hit this massive fintech rumor before we wrap. Stripe is reportedly looking at acquiring PayPal.
The giants are eating the giants. PayPal stock was up almost 7% just on the whisper of this deal.
This feels momentous. PayPal is the original internet disruptor.
It was the pioneer. But this rumor is a flashing neon sign of a maturing, saturating market. When organic user growth becomes too expensive or impossible to find, you just buy your legacy competitors.
So what's the strategic play for Stripe?
Stripe is the cool, developer-friendly infrastructure. They are the pristine plumbing of the modern internet. But PayPal has the massive entrenched consumer wallet base.
So Stripe has the tech, PayPal has the users.
Right. But a merger of this scale implies that the days of limitless fintech expansion are over. They have to consolidate to survive the next economic phase.
Okay, we have covered a massive amount of ground today. We've got fintech consolidation, luxury bankruptcies, 15-day deadlines for Iran, constitutional tax crises, and the Pentagon threatening to seize AI. Let's synthesize this for the listener. What is the grand unified theory here?
The through line connecting all of this is the battle between hard and soft reality.
Break that down.
Look at the halo trade. The smartest money in the world is buying hard assets. Land, glass, lithography machines. Why? Because the soft assets, the software, the algorithms, the code, are suddenly incredibly vulnerable.
They're under attack from two sides.
Exactly. They are under attack from AI obsolescence, which is exactly why Workday's seat-based pricing model is terrifying investors today. And they're under attack from the sovereign state, which is why the Pentagon is threatening Anthropic with the Defense Production Act.
That makes total sense. You buy dirt in Texas and glass in New York because the federal government can't easily download it and seize it, and a large language model can't code it out of existence.
Bingo. The stock market is behaving as if AI is a magical productivity tool for the future. That is the Anthropic collaboration story. But the U.S. government is treating AI as a critical weapon of war right now, and those two perspectives cannot coexist for much longer without a violent correction.
That is the ultimate friction, a tool versus a weapon. And tonight, at the State of the Union, we are going to see exactly how far the president is willing to push executive authority to wield his own weapons, whether that's bypassing Congress for tax cuts or dropping a military deadline on Iran.
And don't forget the domestic border fight. That DHS shutdown isn't just bureaucratic noise in Washington. It is a fundamental fight over physical control versus legal boundaries. It is all about authority.
Oh.
Who has the authority to tax? Who has the authority to police the border? Who has the authority to control artificial intelligence?
We are entering a crucible where authority is going to be relentlessly tested in the federal courts, on the trading floors, and potentially in the Strait of Hormuz.
Absolutely. The soft landing narrative that Wall Street loves so much relies entirely on systemic stability. But every single data point we dissected today screams massive instability.
So I want to leave you with one final provocative question to think about tonight. We started this deep dive talking about the massive relief rally because Anthropic promised they just want to be collaborators. But if the Pentagon actually drops the hammer and invokes the Defense Production Act this Friday to seize that technology, does that software rally evaporate overnight?
That is the multi-billion-dollar blind spot. Are we happily pricing in collaboration when we should be aggressively pricing in conscription?
Collaboration or conscription? That is the choice on the table. So as you watch the State of the Union tonight, ignore the applause lines. Listen closely for the specific ultimatums on Iran and pay attention to the exact legal phrasing around those tax cuts, because that is where the real systemic risk is hiding.
And watch the body language of the military brass and the intelligence chiefs in that room. That will likely tell you more about the next 15 days than the speech itself.
We will be watching every minute of it, and we'll be right back here to break down the fallout. Thanks for joining us on this deep dive.